Hey everybody, Chuck Barone here. It is Tuesday, April the 23rd, 2024. Welcome to the show, guys. You see this day we're living in. I got to tell you, and I'm an old fart now. I lived through some crazy times in this country. 60s when I was in my real youth when I was a kid. 70s I teenaged, and even the crazy ass 80s when we had the Reagan Revolution. But I never ever lived through times as crazy as the times we're living through right now. I got to tell you, it's unfreaking believable. Anyway, I babble like always. Just want to take a second before I get started here to welcome everybody and, of course, thank you guys for your support. You guys being here means the world to me. Nice to see Attila and everybody already getting started up over here. And I got a lot of interesting stuff to talk about today. All right, let's talk about markets. So today we knew it was going to be a quiet day, but we did get a little bit of data come out, and the results were not good. And we're going to talk about that in a little more detail here. So the market cheered, yay, yay, the economy is crapping out. Maybe we got a chance at these rate cuts after all. And this is just lunacy, people. You can't cheer for the whole economy to slack off because you're hoping to save 0.25% on your freaking car loan. That's just nuts. So anyway, the stock market reacted like it was a boom time. Rallies up like crazy across the board today. The Dow up 263 points, 38,503. The NASDAQ up 245 points, now at 15,696. The S&P up 59 points, 5,070. Yay, stock market. Now, I hope that they're going to enjoy this. I mean, I guess we've been waiting for this recession to come for a long time. I'm just not sure if today's data is exactly the confirmation that things are going to go off the rails here. But anyway, the market reacted like it was. The bond market today, basically, the market was up a little bit, but not very much. The 10-year falls 2 basis points. Remember, guys, when prices go up, yields come down, right? So the base falls 2 basis points, now at 4.60% even. The 2-year falls 3 basis points. 4.94%. Well, that's a big nothing burger pretty much, but that's the way we like the bond market. Don't get me wrong. We like it a little quieter, not as crazy up and down and topsy-turvy. So quiet day in the bond market, but a little bit of a rally, and bonds going up a little bit. The dollar today on this news falls 44 basis points, 105.69 on the index. Dollar weakening. I get both sides of this argument where a weaker dollar is great for our trade and blah. I'm not a big believer in that. In my mind, the stronger the dollar can be, the better it should be for people whose everything is based on that dollar. So anyway, the dollar falls today. Oddly, gold falls with the dollar. Gold falling $5.40, $2,322.50. Silver rallies up a little bit today, up 13 cents, $27.26 for an ounce of silver. So really not much happening in gold and silver, really. I'm surprised. I think that the sell-off in gold, we know how these markets are, right? We know the demand is still there. We know China. I'm talking about that a little bit. Oh, man. They have big designs on the gold market. Talking about just China alone could buy up to 11% of every year's global supply. Crazy. Anyway, so precious metals, not a great day today. Oil up $1.50 pisses me off, man. I thought finally oil was going back down toward our target here. Rallies up today. I guess, what news I didn't see news that would make oil move $1.50, but it did. $83.40 for a barrel of West Texas Intermediate, and Bitcoin falls $155 today. So really not much in Bitcoin. 66,330 digesting the halving pretty well, I would say. And you guys know my opinion on Bitcoin. I believe as these ETFs become more mainstream, it's gonna go up. All right, so let's talk about this data we got today and how it affected the market. Okay, what happened was the S&P puts out this instant PMI and purchasing managers index report, and it actually fell to its lowest level in 4 months. Clutching pearls, where's my fainting couch, right? The number, now the way the index works, it's 50 is the Mendoza line. Above 50 is still growth. Below 50 is contraction, right? So it's still above 50 on the index, but down from 52.1 in March. So that's a pretty big fall, 2 points. Report showed a decline in orders, factory orders, for the first time in 6 months. Showed companies scaling back on employment. This is legit employment numbers here. First time in 4 years. Maybe that's some foreboding for jobs coming up here, right? Everything blamed on the change in monetary policy with the Fed. With the way the numbers are coming out, the Fed unable to cut rates. These purchasing managers had factored in rate cuts of 7 rate cuts, then 5 rate cuts, then 3 rate cuts, then 2 rate cuts, then wait a minute, we might get a rate increase. What the heck? So this report, not surprising to see it falling down, right? I think it sets up the GDP numbers, which are going to be out Thursday. I think it sets those up to be down a little bit. We had 3.5% growth in the fourth quarter. We're talking about 2% growth in the first quarter of this year. So we'll see where it ends up. But I think this kind of gives us a little bit of a foreshadowing that it might not be a super robust number, right? All right. So that was the big news of the day that moved the market, this obscure PMI report. I think the market's looking for any excuse it can find to rally, okay? Guys, this is a head fake, nothing more, okay? We need to understand here that the economy, for the most part, in spite of all the negativity, okay, in spite of higher rates, people are still spending money. Now, granted, they're maybe not buying the money they're spending more money to get the same stuff, but they are spending more money. U.S. Treasuries, did you see this, guys? Now they're going to have it. They haven't done one since 2000, I think around 2002. They're going to do a bond buyback program to increase liquidity in the Treasury bond market. We've been talking about that on the show, how there's just not enough liquidity in the entire world to keep the Treasury happy. They're borrowing so much money, $1 trillion every 100 days. Now they're going to do this buyback program where people that are sitting on bonds are losing money, right? Like you got a bond that's a 2% bond and today's rates are higher. You got a loser there. You're giving up face value. You know how bonds work. So to create a proper yield, you're giving up principal to bring the yield up. What they're going to do, I guess, is they're going to buy those back at face value so you can invest that money then and back into treasuries at higher yields. This is the genius of our government, guys. They're going to borrow money to buy back bonds they're only paying, say, 2% on. They're going to buy those bonds back, and then that cash is going to be used to buy bonds that pay, say, 4%. This is a great idea, not even a little bit. This is idiocy, but this is what our government seems to be expert at. So yeah, so if you got losing treasury bonds and you've been looking for a chance to if you're looking for a nice comment there, Ron Hubbard, hilarious. If you're looking to get dumped some treasuries that are, underwater, here's your opportunity. Global military spending, guys. Global military spending hits the highest record number ever worldwide, $2.4 trillion worldwide on weapons, military spending. I'm sure they're spending all this money just to be defensive and not ever planning on using any of this weaponry, right? Because every people always invest that kind of money in weapons, right? They say it's $306 per person for military spending. It's freaking bananas. So guess what, guys? You hear a lot of people talking about the warmongers and what they want to do. Here's evidence that the warmongers are winning. $2.4 trillion on military. All right. You heard this thing? The geniuses in the Congress now trying to figure out a way to start regulating cryptocurrencies, proposing this bill to regulate stablecoin. This is now, I got to admit, I'm a little behind the curve here, okay? But they introduced a bill last week, 179 pages of regulation. I guess they're trying to create a dollar for dollar reserve for these stable coins that are tethered to the dollar, Tether being one of them. They're going to make it where they have to have these dollar reserves, and it's basically they're going to blow the whole freaking thing up, right? Blackstone. Now, I made fun of Blackstone a while ago when they had to limit the amount of withdrawals people could take from their real estate funds. So many people were trying to pull their money out of their commercial real estate fund. It's a huge fund, almost $1 trillion. So it's big moneyed interests. We're trying to pull money out that Blackstone actually had to, for a long, long time, limit the amount that could be withdrawn. And once they hit that limit, that was capped. They were capped out then. Well, if I give you the funny and make fun of them for not doing so great, I got to prop it up when they're doing better. So Blackstone sees withdrawals fall. Now they're not reaching that cap anymore, so that probably will go away soon. Blackstone is saying, this is an interesting idea here, right? They're saying that the big commercial real estate thing, because this is where all this money was invested in, is starting to turn. Investors now feeling like this market might have bottomed out, more willing to keep their money invested and maybe even invest more money into commercial real estate. China gold buying spree is China's government is buying gold like nothing else. It's unbelievable. They're saying it could be a threat to the global supply. China's trying to buy so much gold. They're saying that they only have a very small fraction of their reserves in gold. Like the U.S. allegedly has 70% of its reserves in gold. Well, now a lot of countries around the world, for various reasons, trying to not hold all their reserves in dollar or dollar-denominated assets, starting to really be interested in gold. And they said if China brings I think they have a total of like 7% of their reserves in gold. If they bring the amount of their reserves up to the standard most countries, central bankers, or however their finances are set up, they said that this could be China buying up 10 to 15% of everything produced for the next decade. Wow, crazy times. But if you're a gold person, buckle up, man. Gold's going to go up. Okay, Tesla. Tesla was the news today. Tesla reported. Everybody beat the stock down so bad. I was waiting for this horrifying report. It really wasn't. They missed by 3 cents per share. They had revenue wasn't bad. Their net earnings were down, but not anything catastrophic. Of course, Wall Street's all about it has to keep going up, 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 up. But this was not the catastrophe I was expecting it to be. They came out, turned their position around on this newer model, this new lower price model. They're trying to bring up Tesla out. It'll be around 25,000 for people who want to get started with EVs. I think that would be a huge seller for them, and so does everybody else. So now they announced they were kind of focusing on these robo taxis. Now they're going to take some of that focus off, put it into getting this new, less expensive model put out. And finally, guys, this last one. I was reading today that the U.S. is going to start sanctioning Chinese banks who they're accusing of helping Russia with their war, because Russia has so many sanctions too, right? Well, here's a big problem. What the U.S. is doing is they're going to cut off dollar access to these Chinese banks. This is not going to make China happy. China already, part of the big BRICS, and everybody that's opposed to the dollar as the world hegemonic currency. I think that this is the surest way to end the dollar's current world reserve currency status, is by using the dollar politically as a weapon to punish countries we don't like what they're doing. It's just sheer frickin' lunacy, okay? And this is the reason they had the dollar become the world's reserve currency to begin with, because it was stable. Now the knuckleheads in Washington are going out of their way to make it unstable. How can a country have confidence in holding trillions of dollars if those dollars could become worthless because the U.S. doesn't like what they're doing politically? This is just sheer lunacy. I don't know who's behind this idea, but whoever they are, they need to be fired right now and get somebody with a reasonable competence in there, because I'm no brain surgeon here, guys, okay? But if I know it, they should know it, okay? Anyway, so dollar weaponization, we've seen it with Russia now, with the way they're doing this with the war. We've seen it with Iran over many, many years. We've seen it now, using it on China, using it more and more as like a real resource to twist arms and make people do what we want or force them to. It's just crazy. Anyway, I'm going to quit early today. I've been really rambling, man, but that's it. We'll be back tomorrow. We'll start to get a little more data tomorrow, moving into Thursday and Friday. Those are going to be the big ones. As always, guys, man, I really, really, really appreciate your support. I really appreciate everybody here who's commenting during our live show today. Hit me up in the comments after. I'll be on there. Please hit the like button. It changes the algorithms around. Share the video with your friends. Make sure you're subscribed. Make sure you're getting notifications. Double check all of your stuff. Make sure everything's in order. We'll be back tomorrow to bring you the news you need. Until then, everybody, take care. Thanks.